In March, Congress passed the CARES Act. One of the features of that act was the opportunity for a 180-day forbearance for government-backed securities and mortgages. That 180-day period is about to end, so this week on Talking Real, we talk about all the opportunities available for anyone who's about to end that forbearance period.
The good news is there are lots of options that don't end in foreclosure.
Oklahoma Association of Realtors. This is episode 128 of Talking Real, in the studio with your hosts, Jeff and Nabil. And Nabil, how's your day going?
Day's going well.
Good. Any excitement?
Any excitement? Nope.
Nope.
Oh, actually, just like reliving GRI 202's production. 201, actually, not 202.
Yeah.
It's because we had to flip him a little bit this time around. But yeah, kind of like reliving that in my head and being like, how do we, obviously I was trying to go better. So.
How do we always continue to improve? Yeah, we did something a little different. So we had to do our last GRI before 201 on Zoom because of the ongoing COVID situation. Mm-hmm. And we wanted to say, okay, well, how do we take that and step it up a notch? So we actually had basically some production equipment come in, and we had the ability to switch between feeds, and we really ramped it up. It's not like just sitting there with the instructor just talking to you at a screen. We had for a large portion of it, actually myself, Paul Dismang, and we were able to interact with each other, and we had different camera angle shots, and we could weave in showing the PowerPoint slides full screen and back and have a lot of discussion and interaction and those kinds of things. So I thought it was, if you're going to do online education, like this is really sort of setting the standard for do better, right? Like just do better than just having somebody sit there and talk to you, or just have a screen share on of PowerPoint slides and talk at you through that.
Right. This made it a little more interactive. And I mean, the feedback proved it, because people loved what you and Paul did.
I haven't seen any of the feedback, so that's good news.
It was very interactive. I mean, I was sitting there the whole time and I was engaged for parts of it.
Oh, good.
So look at that.
Well, good. Well, we had fun doing it, and I think that we're going to continue to try to ramp that up, because online education isn't going anywhere. And so whether that's live online education, or if you want to go on and take some continuing education and have that done online, we're trying to use this opportunity when we're now having to focus on delivering content online that we're not necessarily able to deliver in person. We are figuring out new ways to do that make it so much more engaging, so much more interesting, that can then also be translated into online continuing education classes that are just better and different than anything you've experienced before. I know that's a big, bold claim. Like it's the best and better than you've ever experienced, but that is actually, I think, true.
Ever experienced online GRI before?
Yes.
No, but I mean, I don't know, what else you could do to make it more of a production, right? Because like you said, we had multiple cameras. You had a nice little banter going on with Paul. It was, people were engaged. You could see it in the comments at that point, because a lot of times online classes, you say something, you ask a question, a couple people respond, that's about it. But throughout the whole GRI module, there was a lot of conversation going on in chat. And yeah, so if you want to know what we're talking about and want to experience GRI,
please do.
Like this. GRI 301 is in September, and it's going to be online again. Same production quality.
Absolutely.
And I think it's going to be great.
For sure.
So
we'll have another GRI in December as well.
Yes, and you and Paul are probably going to be back for that.
Yeah, Paul's definitely coming back. And, again, it's having the interaction just, I think, makes it more engaging. So happy to be a part of that. And I always have a fun time with Paul. Everybody loves Paul. He's always a good time, and we have a good time with that. So, so we look forward to having him back as well. And he's going to do things on like property management, trust accounting, all kinds of good stuff that you need to know for sure. Yeah. So check out the GRI program. How do you get signed up?
Go to okrealtors.com/events, and the links are right there.
For sure. So sign up and check it out. Again, it's not like we're just, again, having a somebody sitting on a Zoom call talking at you for 8 hours. It's interactive. It's different.
It's not your typical Zoom call.
Absolutely. This is sort of off topic a little bit, but I had an interesting experience today. So we're getting life insurance. So I've never had life insurance other than just maybe my employer provided like a small life insurance policy just as part of what you're doing. But we talked about sort of broadly, financial planning and all this, and term life insurance is one of those things that people often consider. And that's basically saying, okay, I want a life insurance policy of X amount for X number of years, right? Until you get to a point where you don't feel like you need it anymore because you've saved enough money in retirement accounts and things like that you don't necessarily need it. So it's supposed to kind of bridge that gap until you feel good about your savings. And again, this is something that's like commonly recommended by financial planners and professionals like Dave Ramsey, people like that. They recommend term life insurance as something. So we had talked about it and considered it. Why am I telling you about this? This is just something for realtors to consider, right? This is a thing that especially if you've got children, those kinds of things that, God forbid something happens, whether, obviously COVID and what's going on now brings that to the front of our minds that even if you're healthy and so forth, like you just never know what can happen. So worry about these things now, the estate planning, the financial planning, saving, all those kinds of things we need to be doing now. And so relatively simple. We contacted our insurance agent who has us set up, but this is interesting. We had to get like some health screening done. We had to do like a 20-minute phone call, and they ask you all about your health background and all these kinds of things. And then they send somebody out. They actually came to our house and
to do a physical?
Sort of. I mean, they like take your blood pressure and your pulse, and then they draw some blood, and then they take a urine sample, and like that's pretty much it. And then they ship it off, and then you can get the results or whatever. But all part of getting life insurance. So it's very interesting. I didn't realize it was so in depth to get that life insurance because, I guess if you have some sort of, current disease or something along those lines, that changes the rates, a health issue that could change the rates or whether you qualify or not. So
how risky you are.
Yeah, exactly. Yeah. So what's that got to do with anything? Not much, except that, think about your financial planning and the tools that are available to you now. It's one of my goals for Talking Real at some point to get a professional on to talk about, okay, what are some good things realtors can do in terms of worrying about their financial success in the future? Because you don't necessarily have a pension or a 401k that's provided by your employer if you're a realtor, right? You're an independent contractor. It's all on you. You got to worry about it yourself. So what are the tools out there that you can use that, one, will help set you up so that you have retirement savings, but two, on the back end of that, also save you some tax money, which is also on my mind because I just got our tax returns back yesterday to be shipped off to the IRS and Oklahoma Tax Commission. So I've got that on my mind as well. And like, how can I shelter more income from taxes? So that's another way you can do it is through retirement accounts.
Yeah. Hey, that's a great idea. Who doesn't like sheltering income from taxes?
Exactly. Legally. So,
legally, yes. Let's put that caveat in there.
Exactly.
Legally.
So now's a good time to think about those things. It's on my mind. So I wanted to just share that of something I had going on today.
Yeah. So hopefully in a future episode near you.
They're always near you. The episodes are always near you. So, we wanted to talk today about something that's coming up. Okay, so if you go back, flashback to March, and I think it was March, we were dealing with the very early stages of the COVID-19 pandemic, and we are still dealing with the COVID-19 pandemic. Hasn't gone anywhere. But in March, Congress passed the CARES Act, and that was the Coronavirus Aid, Relief, and Economic Security Act, and this is important for us to talk about.
And we covered that in episode 114.
114. There you go. We talked about that. One of the very common questions that was coming up from realtors is, what about our clients who are now unemployed and they need to deal with their mortgage payments, those kinds of things. Well, one of the things that the CARES Act created that we talked about was a 180-day forbearance, which basically allows you to pause your payments if you have a mortgage backed by the federal government, which is something like 85, I forget what we said, I think it was 85% or something along those lines.
It was a pretty high number.
It was a high number. Yeah. Most people, the vast majority of people do have a federally backed mortgage. And so those people, all they had to do was call their loan processor and ask for the 180-day forbearance because of a COVID-related situation. Unemployment was the very common thing. And that was 180 days. And now that we are into July, we are rapidly approaching the end of that 180-day period. And so we wanted to take this moment to kind of refresh as to what the options are going forward now, because you may have people who, again, clients who at some point may be wanting to sell or wanting to buy or something along those lines, and they need to know what to do because some of these things can affect your credit pretty seriously if you don't handle it right. And so people need to make sure that they're fully aware and being very proactive in what they do. Because again, if you're not proactive and you wait till this 180 days to end, it creates more problems as well. So again, we wanted to talk about some of these things so that if you've got clients or potential clients that you're working with that are in this situation, that are going through this forbearance, you can kind of give them some ideas of here are your options moving forward. And again, to make sure that they're staying on top of it.
So just to kind of set the stage, the Mortgage Bankers Association has reported that 8.39% of loans were in forbearance as of June 28th.
Yeah, that's a lot.
Which is upwards of 4 million mortgages.
Yeah, that's a significant number that are currently under forbearance. So that is a big deal. So there's a lot of people out there that have taken advantage of this. And I'm sure that number has come down over the 180 days to some degree because you didn't have to take the full 180 days, but that's still, again, there's a large number of people.
Well, this was 3 weeks ago.
Yeah, exactly.
So and we know, as much as we're quote unquote out of it because, everything's not shut down anymore, but we're still in the midst of it. So, a lot of people still don't have their jobs back. They might be facing some other financial hardships, whatever that might be. So what are your options? Yeah,
so the first thing that you need to understand is contact your lender. The same thing you did 180 days ago when you were having the issue first come up, to take advantage of it is to contact your lender because they're the ones who ultimately hold the keys to this deal. They're the gatekeeper, so you got to work with them. And the biggest issue is if you know that you're going to be unable to meet the terms of your forbearance when this 180-day period ends, then you really got to get ahead of it now.
Yep.
So the first option that you're going to have, and again, exactly what happens sort of depends to some degree on these, on the actual terms of your forbearance. They probably required people to sign off on some sort of agreement. So you definitely want to read that, know what's in it, specifically what it says.
Which ideally you should have read before.
Yes, hopefully. But we know how people are about reading the things they sign.
And sometimes you don't have a choice.
Exactly. So in this case, the first option is if people are still in need, so they're not going to be able to go back on their regular payments, maybe they're still unemployed, is to do another extension of the forbearance. Because the CARES Act, they initially provided that you can have a request of 180-day extension, but they also said that you can have another 180 days if you request it.
If you need it, yeah.
Exactly. So that would give you up to a full 360 days of forbearance if you needed it, so almost a full year. But the thing is, you have to contact your lender before the forbearance expires, because if you let it expire without them giving you the extra 180 days, then it will automatically kind of go back into payment status. Then you miss a payment, then now you've got penalties and all those kinds of things. So if you're not able to go on the back on regular payment schedule, you can get up to 180 extra days, but you got to contact the lender before that period expires. And so now's the time to be doing that.
Right.
And again, the reminder here is that it only delays your payments, so you'll still have to make them in the future. It doesn't mean they're forgiven. But I think what's happening in most of these cases is they're putting those at the end of the mortgage. So it's not like it is due. That was an issue early on, was all these 180 days, 6 months of payments are due as soon as that period's over. But I think what's ended up happening, because that's obviously not feasible for anybody to do that.
Because if you could do that, why
was I forbearing that?
Yeah.
So they are instead putting them on the end. But again, that's lender specific. So people need to make sure what the terms of their forbearance is. But that's the first thing, get an extra 180 days if you know that you're still going to have a problem there.
Right. Another option, if things have started to look back up and are going well, right now, mortgage interest rates are the lowest.
Literally.
I mean, I cannot stress that even more. The lowest.
Yes.
They are around 3%. So refinancing might be a better option for you.
Absolutely.
Even if you're going from a 4.125% rate to down to a 3% rate, you could save more than $40,000 over the 30 years that you might refinance for.
For sure.
Which is a significant chunk of change.
I mean, and I've heard stories of people that, they got their mortgage 10 years ago or whatever, and their interest rates are significantly higher than a 4% or 5%.
So imagine going from that to that, you would be like, man, I didn't even need forbearance.
Right.
Right? Maybe. I don't know. But refinancing does come with some costs.
For sure.
So, you have to make sure that it is going to be financially worth it, not just because of the lower interest rate, but because long term it's going to have a better impact for you.
Yeah. I remember not long ago, I actually sat down with my dad and they were looking at the options. They had been contacted by their mortgage originator and said, hey, you might want to consider refinancing because the interest rate your house is currently at, they've come down so much that now might be a good time. And so him and I sat down and kind of walked through like all the various costs and like, okay, it's going to cost you this much up front. And so, but it may be like, well, it's going to cost me, $3,000 or $4,000 now to pay all the costs and everything to refinance, but it's going to save me $20,000 over the next 10 years. And so like that makes sense in some cases, right? It just depends on the circumstances.
Right.
But in their case, I forget how the numbers exactly shook out, but it was definitely a situation for them that refinancing was going to save them a significant amount of money. That basically the costs that they were paying up front were going to be repaid in like 3.5 or 4.5 years, that was going to be paid back because of the lower rates, and the lower monthly payments that they were making. Right. And so from then, everything after that 3.5, 4.5 years, whatever it was just free money. It was
right.
paid for,
just
and that's
savings.
Less money. So definitely worth considering those refinances right now. Because interest rates, I don't know that I said this before, I'm sure that there's no way they can go any lower. And here they are.
Here you are. Yep.
So, things like credit score matters and all those kinds of things. But again, if you are in the 180 days of a forbearance, so maybe you haven't made a mortgage payment within 4 months or whatever, that shouldn't affect your credit now, because the mortgage companies were prohibited from reporting you to the credit companies for missing a payment or something like that if you're on a forbearance. So it should have no impact on your credit score at this time. But again, if that goes back to, a payment status and you haven't got a new forbearance or anything like that, then it could start to affect your credit score. So that's again why you got to be proactive on this if you're going to do it. Yeah. So get that refinance done before your forbearance ends, if that's the situation that you're in.
Right.
The next thing is a loan modification. This is a little bit different than a refinance, as opposed to, refinance is essentially a new mortgage. But in some cases, then they can still do a loan modification. And basically this just allows them to change the terms of the original mortgage, such as the payment amount, the interest rate, or the length of the loan, to reduce monthly payments, clear up delinquencies, those kinds of things. So again, this is a little bit different because this could have a little bit bigger impact on your credit score. Not as bad as a foreclosure or anything. And some lenders do charge fees for modifications, some don't. It just kind of depends on the circumstances. But if you're in a situation where maybe you had a job, you're unemployed, and you got a new job, but maybe you're not getting paid as much, and so that old payment is a little bit outside of what you can afford, a loan modification may be possible. And this is one of those things of just contacting your lender to say, look, I'm in this situation. I don't know that I can do the same payments. What are my options? Is there some way to modify this loan that we can come to a new agreement that will still let the lender get paid what they're owed, and you'll be in a better situation? So that loan modification is another option where a refinance may not be on the table.
Right. And it's important to assess, get all the options, like you're saying, talk to your mortgage officer and get all those options, because once you have all those options in front of you, you can make the best choice for you, because the same choice is not the best choice for everyone.
Absolutely.
Another option is to simply put your house on the market.
Absolutely.
things either have gotten better, or like you were saying, you might have gotten a new job, not making as much, whatever the case might be, you're looking to downsize, looking to upsize. Right now is a great time to put your house on the market.
I think it is. The inventory is at significant lows. So if you're going to sell a house, now's probably a really good time to do it.
Which sounds counterintuitive.
It does.
Right? With the economy being a little shaky, unemployment kind of rising and falling at the same time. Is this a good time to sell my house? Yeah, there's a lot of people buying houses right now.
I think for sure. And according to NAR, pending home sales jumped 44% in May. So while there was a big crash kind of in March and April where those pending home sales went down, I say big crash, pending home sales went down, but up 44% in May. So things have picked up in the home selling market. Anybody who's out there right now is realizing that, people are out there buying houses. There's not enough inventory. So somebody who's in a housing situation where they're concerned about affording it, now's a great time to sell, particularly during that forbearance period. Because again, it's not going to hurt you. You're not worried about a foreclosure or a short sale or those kind of. I mean, this is just you have the opportunity to sell their house and try to get out from underneath it right now. Right. So that is a good alternative to a lot of other things that again people may not be able to do. So they may not have the credit score for a refinance, or the terms just may not be that great, and it may still be too much, whatever the case is. Right. Selling your home now while you have the opportunity to go on forbearance as opposed to just stopping paying your mortgage is a good option. So that's really good for all of our realtors out there who can make sure that they understand that that's a good, it's a kind of a sad marketing tool, right? That you don't want that to be the situation, but at the same time,
you don't want to be forced to sell.
Absolutely. Right? But it's, that's the option of if you can't afford your house payment right now, then, maybe you should sell your house and let me help you find something that better suits your financial needs.
Right. And it's a good opportunity to get access to that equity that's built up in your home that has been built up from the months, the years, however long it's been off the mortgage payments that you've been making.
Absolutely.
So probably not months, but years.
For sure. And this is the thing is that the last option, right? If none of this works, then what are you left with? Well, it's foreclosure. Like this is what we don't want to see, right? We don't want to see a ton of foreclosures coming through. Now, it may be the only option. What we want to try to do is intervene for the people who feel like it's the only option and don't understand or recognize that there are other options, like, well, let's just try to sell your house before it goes into foreclosure and affects your credit score.
Or modify your loan.
Let's try to modify the loan. Let's try to refinance. There's all these things that you can do. Let's get you another 180-day forbearance because they don't realize you can do another one. So what we're going to do is intervene on the people who those are good options for, as opposed to thinking, well, there's no option, I'm just going to let it go into foreclosure, right? Because maybe we can avoid foreclosure for some people, and I think that's what we want to do. In May, more than 7% of mortgages were delinquent, which is a 20% increase from April. And that's what we're concerned about, is creating a big foreclosure crisis because people have lost their jobs due to, places closing down during the COVID pandemic and everything else. And so we want to try to avoid that as much as possible. Now,
foreclosures are prohibited until at least August 31st.
Right. So that's, dealing with the 180-day forbearance period. They can't foreclose on anybody while this forbearance period is in effect. There's basically a moratorium on any federally backed mortgage from foreclosing. So there are people that have a forbearance and there are people who don't. Nobody's getting foreclosed on at the moment. But we don't want to happen as September 1st hit and there's like millions of foreclosures that are filed. Nobody wants that. So that grace period is going to end. And it's just, it could be a nightmare if we don't get out there and help the people who need the help to get that other forbearance, modify the loan, all those kinds of things. And of course, as realtors being the experts in real estate, this is a really good way that you can help your clients and the people out there to just help spread this information so people understand what their opportunities are. Help them a little bit now, and they'll be ready to use you as the realtor when it comes time to buy or sell that house. Right. So wanted to share this information as this is rapidly approaching, help get people back on board with staying in a house or finding a new house that'll work better for them. And realtors, is the voice of real estate, and the experts in the field can be a huge resource for people. And so we hope this information will help you be a resource for all those people out there in your community, in your circles, so that, again, we can help avoid that last resort of foreclosure.
Right. And, just like every week, help spread these options and this knowledge to your fellow realtors that can go out and help other people. So share this podcast.
For sure. If you've got a client that says, man, I don't really know what my options are, send them a link to the podcast and say, hey, listen to this. They talk about a few options. Once you've had a chance to listen to that and get up to speed on things, give me a call back and let's talk through what your best options are and I'll help you out.
Right.
Great opportunity for everybody out there. So please do share. We appreciate it. And we just thank you so much for all your referrals.
That's right. And if you're so inclined, leave us a rating, write us a review. That helps us get out front more people.
Absolutely. So until next time, we'll see you next Tuesday on Talking Real. I saw somebody make a post yesterday on MLS OK.
Yeah, I saw that.
And so it showed that basically there's like however many, like in the last 3 days or however many 400 properties that went under contract and like 100 new listings, which means the inventory is just crashing. Like the houses that are out there going under contract, but there's not new ones to take their place. So people looking to buy, like there's not houses out there to buy. Like we're reducing that. So there's only like 2 months of inventory. So basically if you stop listing new houses, but the purchasing of houses continued, then you would run out of houses on the market in 2 months.